I think the first thing with respect to corporates out of the GCC is they've been quite restrained about taking on new financing, and in fact they're more keen on reducing capex as well as deleveraging to the extent possible, and, and taking a slightly more cautious view of the outlook given various uncertainties, including oil prices, interest rates, and potential geopolitical concerns. I think the challenge for issuers, the biggest challenge by far is the basis swap, given that most of them are dollar-based companies or using dollars as a proxy for the GCC currencies which are pegged to the dollar. Issuing in yen or euros and swapping the proceeds into dollars is extremely expensive, so you would have to be selling securities at a much lower spread in those markets in order to be able to fund in a competitive manner to dollars. That's the reason why most of the issuers that have been funding in the alternative currencies have either been the occasional ones that have the underlying needs in those currencies, IPIC or Etisalat in respect of its North African businesses, which are euro correlated, being two examples, or occasionally companies with indigenous needs in yen. I think the communicating the credit and getting investors interested in the credit is not the main issue. I think GCC is firmly on the map in a range of markets in that respect. I think the first thing is that it's the flagship event for the fixed income market in the GCC. It's progressed, as everybody has commented, over the past couple of days, over the past several years into the most recognized conference. I think in general the role of conferences in regions where there's multiple countries and jurisdictions involved, investors coming from different continents, is the convenience of having a lot of people, whether it's issuers, investors, intermediaries, even development institutions, export finance institutions, all in one place, and that saves a lot of flight times, particularly in jurisdictions such as the Middle East, where responsiveness for telephone calls or emails is not always what it is in the Western world. I think the panel which I moderated, so I wasn't directly leaving the messages, but trying to tease some out from the panel, was first of all from the corporate perspective. Yes, they're watching oil prices, interest rates, and other macro issues or geopolitical issues very closely. They haven't in any way panicked or found any urgent or acute situations in the Gulf as a result of that. They are continuing the strategy of diversifying, whether that be between bank financings and capital market financings, or currencies or types of instruments within the capital market financing basket. So I think those were the main messages from the issuer side. From the investors, I think they remain quite constructive on the GCC, despite the fact that valuations are very tight by historical grounds, and while not necessarily matching like for like on a ratings basis developed markets, they're at the tighter end and not showing any obvious capital appreciation potential. They do value quite materially the lower volatility related to the fixed income assets from this region, and therefore they are prepared to pay up for that feature.